Good morning, you guys. It's time to rise and thrive. I'm Tricia Turner. We're a little bit late today. We come to you pretty much every Tuesday, 9 a.m. ish Central Time. Severe technical difficulties today. You just never know what you're going to expect. And when it's live, you really don't. So we're happy that we're here because despite all the challenges, I am bringing you Saba Mafi today, and she's with Supreme Lending. Saba is known. She came into our world last year, and she came into our world. Of course, we run the real estate team. We do a lot of transactions. She came into our world from one of our other top producing agents, and came in here like closing deals like crazy, saving thousands of dollars from our buyers. Literally, one of our files, she saved over $23,000 from what the buyer had to bring to the closing table. Not only that, but she got a 6.75 interest rate. I think, where was he at? 5.5?
5.75% interest rate. Yeah,
Yeah.
he was initially getting a 6.75 with another lender, and then we got him a 5.75, and he didn't pay any points or fees to get that rate. So he was thrilled.
Saba, I want you, for everyone that doesn't know you, give us a little bit of your backstory, like where you are in the world, what you do for a living, which we've already alluded to, and how long you've been doing it.
Okay, awesome. Yeah, so my name is Saba Mafi. I am a producing branch manager here at Supreme Lending in Houston. I have been in the mortgage world originating for the last 10 years, and I have helped over 1,500 families here in our local market. So it's been a blessing to be able to be here in my local market and help put families into homes, all walks of life, folks that are first time home buyers that think they might not even be able to purchase because they're a little bit short on funds for closing, or have had other experiences where they've been turned away because of that. We've been able to help get them some down payment assistance, and take advantage of first time home buyer programs. And then other folks as well that are business owners, that do really well but also may have been turned away because of aggressive tax write-offs, that we were able to help get into homes. And these are local business owners here in our community. So it's been a blessing, and that's mainly the bulk of my clientele. Of course, like I said, I help people put people into homes, but we also like to strategize and find alternative mortgage solutions for them when it comes to refinancing them out of maybe a loan that they have, and they want to get out of to get more favorable terms. So we do a lot of refinances as well. Yeah, and at this time, I'm here in Houston. Our office is on Post Oak. I have a team, a great team that I've put together over the last 6 months. So the team is new to me, but it's great. I'm very proud of the culture that we've created as a team. It's very important, and we all have the same goals: is to really help put families into homes.
For sure. And I'm glad you brought that up. All right. Now, you guys, Saba said she's been doing this for 10 years. If you have been in the real estate industry for anywhere past the 3 year mark, 4 year mark, when COVID came around and hiked up sales prices and everything under the sun, June of 2022, we saw interest rates start climbing. And we're now in May 2025. We're coming up on 3 years of this crazy interest rate roller coaster where it's really been up, a little down, up, a little down, up, just crazy. And when you look at the history of mortgage rates, we hadn't seen anything like this ever, where they were like doubling in less than a 12-month period. So Saba, being in this for 10 years, we thought we'd see a relief last year. We thought the interest rates were going to give us some kind of a break. We still really haven't seen that break. What do you think is going on here? Because you have continued to close deals like crazy. Your sales are amazing. What are we doing, or what are you doing? And how can we help everybody?
That's a really great question. And of course, as you know, rates ultimately yield the monthly payment, therefore the affordability for the buyer. What I've been doing is really trying to custom tailor a mortgage that fits the buyer's needs. So I really, and I will say, we really go out of our way to find products and programs for certain scenarios to help reduce the interest rate, whether it be through like a first time buyer program, or looking at ways to reduce the loan to value, the LTV. Sometimes if people, and again, it just depends on the walk of life, right? So you may fall into a category where the buyer may be eligible for something that yields a discounted rate, and having access to all of these loan programs is made a lot easier. And then, of course, there might be certain scenarios where you're working with somebody who is looking to purchase a property and is pretty liquid. And sometimes reducing the loan to value really helps as well, secure a lower interest rate or discounted fees and things like this. So we really try to strategize, and work with the client directly to really get them the lowest possible or the most affordable payment. And sometimes, it's not instant. It might take a lot of, ironing out, but it could be done, rather quickly.
When you look at like the history of interest rates, and I didn't even look where they are today, but when they went, from 4%, 5%, 6%, up to 8%, you saw a lot of families no longer be able to afford to get into a home. And then, of course,
Right.
homeowners insurance is at an all-time high.
Right.
You're
Right.
known for getting the deal done and making sure everybody fits into a home. How have you had to kind of adjust what you're doing prior to June of 2022 when interest rates were much lower?
That's a really good question. So, of course, we've also felt the effects of it as well. I will say, yes, we have been able to still, maintain a really, great book of business. But also we have had to work a little bit harder. Okay. A little bit, and by a little bit, I mean a lot, if I'm
Yeah.
being completely honest. And like I said, going out of our way to find and research and investigate what programs and products may be available for these clients. And again, like that's why it's very important to work with a lender that is going to do that, because there is always some solution. You just have to be patient and be willing to go the extra mile to find the right product and program for these folks. And you're right, Tricia, and it's been really unfortunate to see that there was once upon a time, say for example, as little as 2 years ago, where families were eligible for a certain sales price, but are no longer anymore because of the rates that have moved up. Where they may have been at like 4.5% a couple years ago to right now, and today's rate is basically 7%. 6.9 is where
Yeah.
we opened up this morning. So that 2% is going to yield a much higher not only payment, but it also has put people out of qualifying, naturally, right? It increases the debt to income ratio. But the good news is that we do have tools and different solutions to be able to sometimes even bring down the debt to income ratio. And we will, upon consultation, see if that is fit for the file. And if it is, we're using, programs like this to be able to reduce the debt to income ratio if that's a problem. And then, like I said, try to fit them into a discounted rate program if eligible.
When you look at like before COVID, we seem to be kind of on like a stable ground for so long. Interest rates were predictable, sales prices predictable, like everything was running really smoothly. Balanced market, they call it, right? COVID
Right.
comes along, housing appreciation skyrockets. First
Right.
time home buyers are like completely knocked out of the market because they can't compete with multiple offers. Cash being thrown down on these homes, a lot of cash being thrown down. Then we enter the market where interest rates start climbing and the market like cools completely. And again, I believe first time home buyers are the ones suffering because, like you just talked about, this housing affordability. Would you say that because of all of this twists and turns of events, you guys have really gotten crystal clear on down payment assistance programs for first time home buyers?
Absolutely.
Okay,
Absolutely.
talk
Yes.
about
And
that.
yeah, so we're also seeing that, a lot of families aren't as liquid as they used to be once upon a time.
Yeah.
So we have to, and like you say, like, before we used to see, I mean, we pull credit reports every day, right, as part of the pre-approval process. And now we see so many more families with higher debts, and higher credit card balances and things like this. And so, I mean, it's crazy to see it. And so when, when they're telling you like, hey, I can only afford X amount, it's truly that they really can't. A lot of people are in more of a pinch right now than ever before. So the affordability has definitely gone down, and it's made us, have to think outside of the box. And applying these down payment assistance programs, which are great, by the way, they're fantastic. They are really helping not only with the down payment and closing costs and reducing the cash to close for the buyer, but also some of these programs come with a discounted interest rate. So you're actually getting the best of both worlds. What's crazy is that you can even possibly get a lower interest rate than the market rate taking down payment assistance than if you were not to take it. Again, the catch is, when they say like things are too good to be true, if it sounds too good to be true, it probably is. Well, this is one of those cases where, it's really not like that, because here's the thing. You do need to meet certain criteria. So not everybody qualifies, right? So
Yeah.
it's got to be based off of household income. You can't exceed a certain sales price. Income, household income. You do need to be, of course, in Texas, and then the credit score needs to be at least at a 620 and above, for most of these discounted rate programs. So that's really the main, catch, is that not everybody is going to qualify. But if you ask me, in theory, it's pretty easy to qualify for.
Wouldn't you think people should at least try?
Absolutely.
I think with when you think of down payment assistance, I think, and I could be wrong, but I think a lot of people correlate that with low income and pride. Like, I'm not going to say I need down payment assistance because I'm not going to fall into that food stamp kind of stigma. And it's not that. Like,
It's really
everybody
not.
needs help.
Yeah, it's really not that at all. And we'll see folks that, that have purchased a home already, because we've got some down payment assistance programs with no first time home buyer requirements. It's really not that. They own a property, or they have owned a property rather. They have owned a property. They've sold it. They've got money in the bank. They just may not want to liquidate it,
Yeah.
So, you can't judge a book by its cover.
I always tell people, I'm like, in the market that we're in, number one, when we went through that COVID market, if you needed closing costs as the buyer, you weren't getting them. Like,
You
no
weren't
seller
kidding.
was willing to help you because they didn't have to. They were going
Right.
to sell it to 10 other people.
Right.
Then we've moved through this market where were kind of sitting for a bit, and they still are. But I do believe that this is going to change, and I believe it will be soon. And when we do go through that shift, gone will be the days again where sellers are willing to help buyers with their closing costs. I tell everybody, I'm like, you guys, a buyer right now, it is like your world out there. There's so much inventory, there's so many options. You have desperate sellers, you have sellers willing to negotiate, and you have choices. When you're looking at this, and you guys, Saba is known for closing deals in less than 15 days, and I'm gonna let her talk about that. But when you're looking at this world that we're living in, and you're taking it to heart, like, I'm telling these buyers that I can get their deal done. There's always a solution. What are some of the things that you're having to do, or that you're walking buyers through to make sure you get them into that home?
Good question. So there's a few things I would say. Of course, understanding their timeline is very important, right?
Yeah.
So, and if they are pretty flexible, kind of just to go back to what you were saying, we do have the ability to close loans in 2 weeks.
Yep.
And we've done that. Actually, I've done that, for quite a few, for quite a few families, as a way, just in the last, like, just 2, 3 weeks alone, just to
Yeah.
try to get them into the home and try to win the house. Because especially for first time home buyers, that are looking, say, for instance, in the 200, mid to high 200 to say 350 price point, it's very affordable for a lot of families. So they're going to have a lot of multiple offers. Believe it or not, yes, we are seeing multiple offers in this bracket,
Yeah.
right? because of inventory and all that, right?
Yep.
So one of the ways that we're helping them to win their home or win the house is to offer a quick closing. And by offering a quick closing, the sellers love that. They're not going to have another mortgage payment the following month. It takes the property off the market. It's great for the listing agent, right? It's closed and done, and it's not
Yeah.
sitting there forever. So they love that. And of course, the buyer's agent is happy too. And again, they're going to win the home over maybe somebody else, just because they're offering to close quickly. And sometimes even that helps take away from things like the seller asking for a higher sales price, because again, they're not going to have a mortgage payment the following month.
Right. Which is huge. And when you kind of look at like timeline, like you were just talking about, and closing deals in less than 2 weeks, there are a lot of lenders out there that are known for just throwing out pre-quals and pre-approvals, and they're really just garbage. Like people then go through the underwriting process and they can't get a loan. Walk us through your process.
Sure. So my process is I would say, fairly simple. We really like to simplify things as we move forward throughout from the start to the beginning. So the very first step would be to make a loan application, which can be done in minutes. It can be done from
Yep.
your phone. We have a mobile app. Once the application comes through, we do a same day review of it, and we look through credit, income, employment history. We look at any real estate owned, and from there, we really consult with the buyer to see what it is that they're looking for. How much cash do they want to bring to closing, and where do they want to keep their payments at? If they can tell us those two key things, we can fit them into the right product. We'll, present them with the options that they have, and then ultimately, that we feel is most suitable based on what their criteria is, from cash to close to monthly payment, and then ultimately let them pick what they'd like to do. And then from there, if it is a scenario where we've got, say, for instance, complicated income, or variable income and things like this, I do like to send the loan file into underwriting for a full review, and this only takes 24 to 48 hours. It's not, yeah, it's really fast. Our operations team is amazing. I love them. I mean, they're great. And listen, like, Supreme Lending is in the business to put families into homes and help them win the home and find the right product for them. So our operations team knows that. And again, this is why we're very aggressive on the back end of things as well,
Yeah.
because we really need to make that happen. So what we love to do is just throw it into underwriting, get a full review if we have any complicated income or employment scenarios, or if there's anything that we may be a little bit concerned about. But if it's just, traditional W-2 wage earner, I mean, that's, we can really get that completed the same day, pre-approval, have it sent out. And, you're off to the races putting in offers.
Which is, I think, super important because there's so many people out there that every dollar counts. Like if you, again, I know because we've heard you say it to a lot of our buyers where you're like, okay, like this is critical, like these numbers, you cannot go $1 over this. And when you're
Yes.
looking at things like with a microscope like that, it's imperative. I think a lot of buyers and real estate agents don't realize the important role that you play because, again, if you're not taking a deep dive into their stuff and doing it aggressively and quickly, like I always
Right.
tell people, don't let a buyer get cold. You got to keep them while they're hot and get them through the gates. And you're doing that. Walk
Right.
us through like what you're looking at with your future casting. And none of us I know have a crystal ball, but these interest rates are relentless. And we keep hoping, okay, they're going to come down and they'll be down next month. Where do you really see? And when you're talking to your colleagues, what are you guys hearing about the future?
I'm sorry, it cut out there for
About
the
rates,
rates,
interest
correct?
rates. Yep.
Yeah. So, I mean, it's kind of a touchy subject because we were
Yeah.
really hoping for, just to get some relief here, over the last couple of months, and we didn't. In
Yep.
fact, it kind of took a different turn, and in a turn that we weren't really prepared for, and or wanting. I do think for loans that are closing here in the next, say for instance, 30 days to 60 days, we're advising that everyone just floats because it's a little bit still uncertain right now. And there are still a lot of events and a lot of time to see what's going to happen before we would advise somebody lock in their
Yeah.
interest rate, right? So we want to be able to capture a lower rate if one becomes available. I do think that, what I can tell you is I don't think that we're not going to see 4%, 4.5%, nothing like this before the end of the year. I think there will be a refinance boom, but it will be more towards the tail end of the year. And that would just be putting rates, maybe say for instance, like 1% lower than where we're at right now.
Yeah.
If that happens, if we do see, rates really come down. But yeah, anybody here over the next 30 plus days, I think there's still a lot of events that are about to take place. And I would definitely just flow cautiously.
When you look at taxes, insurance, and again, interest rates, everything relative to someone's payment, what we're seeing right now, and I've been talking about it for about 6 months, is taxes are coming down a little bit here. And I'm talking about local market now,
Right.
which means property values have come down a little bit. So when you're looking at that, I think now more than ever, buyers need to be aligned with experts in lending, experts in real estate, because we definitely don't want anyone overpaying for something right now. If we think there's a shift that we're going through right now or walking through, when you talk about refinance, and I tell all of our agents, I'm like, number one, I believe that buyers need to take advantage of this market right now. You're going to get out there and get a sweet deal on a house, no matter if it's resale, new construction, whatever it is, there's plenty of inventory and people need to sell their homes. So they're making deals. But number two, and I think you just backed that up, we do believe rates will come down eventually. They can refinance. Or they can sell that home in 2 years from now. Hopefully it will have appreciated, at least 3 to 5%, make money on it, and then move up in a a lower rate. What's your thoughts about that?
Yeah, absolutely. I think here's the thing. I always tell people, I say, and of course, you have to buy a home when it's the right time for you.
Yeah.
Like if you need to buy a home and that's the right time, like it's, you got to move, or, you're considering moving because you're up, your family is upsizing, or your lease is coming to an end, things like this. I mean, if you're gonna buy, you're going to buy,
Yeah.
right? So there's no point in holding on and continuing to rent. And really, it's 100% interest rate if we're talking about rates at that cost, right?
We
So,
are.
but here's the thing: you can always refinance it to a lower rate if it's affordable for you at this time. If it's affordable for you and your family, if it's not going to make you have buyer's remorse, right? If you can really afford the payment, you can't really judge it based off of a number, right? Like a percentage, like a number, because like I said, it's 100% cost of interest when you're
Yeah.
renting. Meanwhile, you can always refinance into a lower rate when one becomes available, but you can't take off, for example, $30,000, $40,000 off your loan balance at the end of the year. You know what I mean?
No.
So you can't get that back because it's already done. That ship has sailed. You continue to rent, So you can't shave off, 30,000, $40,000 in 12 months from now, but you can refinance, right? So you're much better off if it makes sense and you're not gonna, you can afford the payment in this moment to just go ahead with the purchase. And more than likely, truly, more than likely, your payment right now is going to be very similar to what you would be paying in rent anyway. And in
Yeah.
some cases, if not less.
Yeah.
And then again, in combination with the down payment assistance programs and things like this, if you are a first time buyer, oftentimes you're coming to closing with, very little cash out of pocket, to the point where, I mean, you're going to have a first and last anyway on a lease, right?
Yeah.
So, and so just things to be mindful of when it comes to that. I mean, I would much rather not would be worried about what my rate is today if I can afford it and refinance in 12 months from now, and gain, equity in 12 months, rather than being so concerned about what that rate was in the moment if I could afford it.
Now I want to switch the topic a little bit to AI, because of course this is involved in all aspects of business, especially real estate. I was listening to a podcast this morning, and an alarming stat, not alarming to me, but alarming, I think, to a lot of people. the predictions for the next 10 years in real estate is that the real estate population as a whole will be reduced by 50% in the next 10 years because of artificial intelligence. Not because it eliminates our job, but because it eliminates a lot of aspects to do with real estate. It makes things easier if you know how to use artificial intelligence. And so when you're walking through the platforms in real estate, what they say is coming in the next 10 years are these large ecosystems surrounded with artificial intelligence, built with massive real estate teams, real estate brokerages, all in one collaboratively, is how you'll see the real estate industry shape regarding sales. Are you guys hearing that same chatter in the lending world about artificial intelligence?
We kind of, I don't think we're hearing it as much as, in like the real estate, sales side of
Yeah,
it, as we are in the financing sales side of it. However, we've always kind of had, we've had like, for example, DU underwriting and,
yeah,
LP, so when that came out several years back, everyone was like, oh yeah, like it's going to get rid of the need for underwriters and processors and things like this. But you know what? And loan officers will be, less needed because we've got like all these technologies and tools and these programs and apps that can do the job of underwriting and things like this.
yeah.
Well, that never happened. It's been already years, over a decade that we've had that. And we still have mortgage loan underwriters, absolutely, all the way. I think that there's always going to be a human touch in this industry that is absolutely always going to be necessary, because at the end of the day, this is a people business and people are going to work with you if they know, like, and trust you. There is a certain portion of it that AI can do and take off of our plate, sure, but at the end of the day, it's really going to come down to your relationships and your your rapport that you have with your clients. And so I don't think we're gonna. I think as good salespeople and good people and people that know our craft, I don't think they can ever get rid of us.
I agree with you wholeheartedly. One thing I would like to say on top of that is for anyone listening, whether they're in the lending world, real estate sales, whatever it may be, if you do not become the master of your craft and be able to be that local expert and be able to guide people and actually know what you're talking about, and then topple that with the amazing customer service that everybody wants, I think those are the people that are going to win. And I say that, Saba, because in just this, because we've known you less than a year, but in this short time of being in a relationship with you and doing business with you, you've become like the go-to, where
Love
there's
that.
a lot of files that end up with, random lenders, or buyers come in with their own lender that they know of. And unfortunately, a lot of times these buyers have to go through some trauma before they start listening to us. And then we guide them. We're like, okay, we know that we can get you a loan, but you're going to have to trust our expert advisor. She's known for solving problems, and she's known for getting into people into homes. And you have not failed yet. And I think that is a huge asset that you should capitalize on, because in your industry, there are so many people that are like smoke and mirrors out there. They don't
Right.
have a clue what they're doing. They don't want to work through the complexity of getting people into a home. They're lazy. They quit. They're like, it's too hard. It's too complicated. You're not going to be able to get a home right now. What drives you, Saba, to have that kind of passion and commitment to get people into homes?
It's a really good question, actually. It's a really good question. I think there's a few different factors that contribute to the drive. The very first, I would say, is just being relentless. I think that you have to try. There's got to be a solution. Like, I'm a very big believer in, you know, in finding solutions, and these folks are coming to us to help them. Like, they're quite literally trusting us with the biggest purchase that they will ever make in their entire life. And I think, it's like going to, say, for instance, like a cardiologist. If I've got like an issue with my heart and I'm going to a cardiologist, I mean, I'm going to want them to try all the way through and, find a
Yes.
treatment for me, find a cure. So, how is it any different for us when people are coming to us as the expert? We have to perform. We can't fail. We can't fail them. And
No.
so naturally, that it's just about relentlessness and really being a professional. And then, like, we were talking about being a master at your craft and really
Yeah.
trying to figure it out for these families. And I think, if you're doing it for any other reason, you're probably in the wrong business.
I agree.
Right.
Yeah.
Yeah, you're probably in the wrong business. And so yeah, I mean, we don't give up. And of course, we get some hairy files, and then we get some ones that are a lot cleaner. And we learn through so much from them too, right? So, and
Yeah.
not everything looks the same after all these loans and after all these years. I could say there's never been two that I could say were even similar. No, there weren't, because everyone's got something different going on, right? So I think just really doing it for the right reason, and doing it from the goodness of your heart to really put these families into the homes that they've worked so hard for,
Oh
right?
yeah. Yes.
And are coming to you as an expert for help. I think that's one of my biggest drives, and of course my relationships with my referring partners as well. Because listen, we're all in this together, right? So I know that I'm helping them out as well, because they are also very, they're doing this for the same reason. And they also are hoping and kind of like depending on, I don't want to say all the way depending on me, but kind of when it comes to the
Yeah,
financing side of it, right?
for sure.
So to really try to get them to the finish line. And I just don't want to let anybody down. And it could be a good thing, it could be a bad thing, I'm not sure. I just know that I really try to do my best. And it's a good rewarding feeling at the end of the day. So when you've done everything you
Yeah.
can.
I love what you just said, where you don't want to let anybody down. I think that, like, just listening to everything that you said, that like sums it up. And I think when people really take that to heart, like, it matters. Your job matters. What you do matters, because it really does. You may not realize the severity of it, but you can either make or break someone's dreams, because at the end of the day, that everyone wants to own a home one day. It is the American dream. It is still the American dream. And unfortunately, when the data is, if you look at the data shows that college age kids right now, they are almost brainwashed to believe that they can never afford to own a home. So the studies show that college age kids believe that they'll never likely own a home. They don't care about owning a car. They'll just Uber or walk everywhere, and they want to live a much more simpler life. But when you look at that, it's like, a simpler life isn't paying rent. Number one, the American dream of home ownership done correctly is at least going to reward you back appreciation, and it's an asset. You're going to actually own an asset. I
Right.
think with you and in the real estate and in mortgage world, I think educating people needs to become like the number one thing, so that we do not ever lose that American dream of home ownership. So for a lot of, we get all kinds of an audience watching the show. What would you tell that college age kids out there that's like, I'm probably never going to be able to own a home? How can they start preparing for home ownership?
I would say get in contact with a mortgage loan professional as soon as you possibly can, if this is something that you're thinking about doing. And you'd be surprised, or pleasantly surprised rather, to see that it may be a lot more likely than you would imagine. And what we can do at that point is, even if you are, say, for instance, a year out, or maybe even just 2 years out, of course, at least we can, well, at least we can start you off by just guiding you in the right direction, letting you know the key things that the mortgage lenders are going to look for. Obviously, guidelines change, quite a bit, and what got maybe guidelines now won't be the same guidelines in a couple of years from now. But at least we can give you an idea as to what they are currently, and what you need to be working on and be mindful of when it comes to credit. Making sure you've got enough trade lines in work. You have start saving, or start, working on a savings plan to put aside for down down payment and maybe some closing costs, and explain to them also what products are currently available to help out first-time home buyers that may also be available down the road as well. But just kind of set them in the right direction and discuss, what lenders are looking for in terms of income and employment history, so that they can start at least, heading in the right path that way. So if you're self-employed, for example, or you want to start a business, just make sure you've got your business up and running for the last 2 years before you, really plan to move into a home. If you are going to be working as a, commission-based job, well, there's guidelines for that as well. So we want to really just discuss what some of those, those key guidelines are so that they're heading in the right direction. And then general rule of thumb right now is 3 to 4 times your annual salary is what you're going to qualify for. So just kind of putting them into a more realistic aspect, right? So if you're looking at homes that are $400,000, you want to aim for a position that's at least you're making 100 grand a year, right?
Okay.
And so just
I
be
love
mindful
that.
of things like this.
Yeah. Talk to everyone and then we'll close out, you guys, because I got to keep everyone on time. Credit scores. I know so many young people don't even think about their credit. Like, a lot of them don't even have credit cards. They've got a debit card and they're like, yeah, no, I'm good. How important is credit?
Extremely. I mean, credit is everything, credit is truly everything, especially when it comes to financing a home loan. You want to make sure you are establishing, the best credit profile for yourself as you can. So I would highly advise somebody that, even if you're not a big fan of credit cards and things like this, that's fine. You don't need to get a whole bunch. You can just get one and you can start working that up. Maybe get a secured credit card,
Yeah.
and for whatever, $500 or whatever it is, and put lunch on there, put gas on there every month, and just, you can keep it minimal if you're not a big fan, but we got to see something. We need, open and active trade lines in order to see that you've established some sort of credit history for yourself, because you got to think about it this way, right? If you're going to a bank and you're asking for $500,000 to borrow, well, we got to see that you've got some, like, did you pay your gas for,
Yeah.
at least for the last couple of years?
Yes.
How are we just going
Yes.
to get out like $250,000, right? So
Yeah.
you got to be really realistic. You can't go, because we do hear some people like, well, we don't trust banks, and
Oh, yeah.
well, I mean, respectfully, you're coming to a bank and asking for $500,000, but suddenly you don't trust banks, and which one is it?
Yeah. You can't
So
have one
why should
without
the
the
banks
other.
trust you, right? So, I mean, we got to be real and we got to keep it, keep it real. But so you can just start off by getting like a secured credit card, maybe a $500 secured credit card, working that up. And your car loan, if you've got a car loan, I mean, that's an installment loan. Even if you've got student loans, those help you out as well. Just make sure you're up to date and you're current and you're not missing payments and things like this. You don't need to have, 800 credit score to buy a house. We can work with scores as low as like a 600, sometimes a 580. We don't encourage a 580, but can we? Sure, we've done it before. But though that means you may have to have other compensating factors like liquid assets and things like this. But yeah, we definitely do encourage you to work on your credit. At least start building your profile. It's very important.
It's super important. You guys, like, I can't speak enough about Saba. She literally has saved our buyers so much money. She's gotten people into homes when they were told no. And through it all, y'all, she makes it seem like seamless because the buyers aren't stressed out, and she's fast. She's fast and efficient. And the agents are like overwhelmed with gratitude because they're like, did this really just happen that fast? Are you serious? And I will like forever be thankful for you and your efficiency and your like transparency. You're always honest with everyone. This is where we are. This is what you can expect. This is your money. And so Saba, like, we're super thankful to have you in our world. Saba, I think she's frozen, y'all. If you can take down, her info is not up there. Saba Mafi with Supreme Lending. You guys, she is one of our preferred lenders. We love her. We'll continue to use her. I'm Tricia Turner. We are going to end this podcast today. Make sure and tune in next week for the next Rise and Thrive episode. You guys always rise up and have an amazing day. Bye, y'all.